The wall gold will hit in October. October will show the release of two important reports: the weekly earnings of wage and salary workers and the employment cost index. These are quarterly reports, and October will show data for the third quarter of 2024. This is important. It's simple math. The last quarterly results of these reports, they correlate with that jump in gold spot price. Remember that? Remember when gold hit the all-time high for the first time a few months back? These reports are eagerly awaited by pundits. They're eagerly awaited by bureaucrats. And of course, politicians use this data to rally the troops. The other wall gold will hit in October is the continued repercussions of central banks. They've shown an increase of more than 34% in their gold purchases. They're the ultimate gold stackers. And we, as a community, we're all distrustful of government agencies. We all view centralized government through a critical lens, yet they are the ultimate gold stackers. Those central banks, they've been buying up gold at a record pace, and that diminishes the supply for you and I on a local level. It's simple supply and demand. The more gold they hoard, the less that's available for us. I've seen dealers unable to budge on a price that's close to $26.50 for a 1 ounce American Gold Eagle. Meanwhile, people are dumping their gold on these dealers. They're looking for cash, and not just gold. Not just gold. They're dumping silver just at the time where we're starting to get some momentum in the silver price. I get it. I do. We've had a stagnant price of silver for a long time, and the momentum feels exciting. I feel it. The other wall we will hit in October is our own stubborn conviction that gold will drop to an acceptable buy price. I read it in my comments all the time. Some of you are telling me gold needs to drop below 2,000 for you to buy again. I'm going to assume those people are new to stacking within the past 5 years, I'd say, because the history of gold shows that it can easily increase 4 times its price over a 20-year period. So it's doing exactly what it's supposed to do. Look, we need to change our stacking plan to address this $2,600 price. The half ounce may be the new full ounce, and the argument over those large premiums attached to fractional gold, it needs to be relaxed. I've always been a fan of the sovereign gold coins. I like those designs, and I think it's worth it to stack those smaller coins until we see a shift, or we could jump into that $2,600 price tag. This all-time high for gold feels like a wall because it is completely out of our reach to buy a full ounce, but that's not the type of wall I'm talking about in October. That all-time high is a price that forces us to look more at the price of silver than the price of gold. We need to look at the price of silver more than gold. We need to be studying that silver to gold ratio rather than scraping together pennies to get to a $2,600 buy price. Presently, we're looking at about 85 to 1 for the ratio. That's 85 ounces of silver to buy 1 ounce of gold. But as that tightens, I'm talking about down to 70, even below 70, that's when I like to swap out my silver for gold. It's the best strategy. It's really the only strategy. We've seen the ratio tighten to around 30 to 1. I think 32 to 1 we got to, at least twice in my lifetime. So it's entirely possible to see that again. And if you're cynical about the ratio tightening, then you're probably cynical about gold hitting and staying at this all-time high for the past 4 months. But here we are. And this is why I diversify my investments. I want to thank West Mining Corp for sponsoring today's video. Their ticker's on the screen. It's CSEWEST and OTCWESMF. Senior gold miners have high market caps and offer lower expected ROI with less risk, but junior gold miners have small market caps and offer higher expected ROI. I like junior miners because they have the highest upside potential because their reserves, they're largely untapped. Their stock prices typically don't reflect the future revenue. They don't reflect their earnings. They don't reflect their cash flow prospects. West Mining Corp is at the top of my list for growth companies. Look, the profit spread for junior miners will only increase the more gold appreciates, and smaller explorers like West Mining Corp, they should benefit in the years ahead. Its flagship, wholly owned Kenna Gold and Copper project has a resource of over 2,773,000 ounces of gold in the inferred category, as well as over 561,000 ounces of gold in the indicated category. Yes, You heard those numbers correctly. That's why I'm so excited about this company. When you break down West Mining Corp's revenue potential, the stock looks cheap. The company has a market cap of roughly $4.2 million. However, West Mining Corp's 6-month earnings report from July 2024 showed the company at around an 8.2 equity book value. So the stock trades at roughly 51% of its book value. That is a considerable discount to what its assets are worth. I think of it this way. If West Mining Corp ceased operations, sold its assets, and distributed the cash to its investors, the value per share would be roughly double the current stock price. Double. West Mining Corp has extensive gold and copper operations through its Spanish Mountain West and Junker properties. Its geological team uses innovative techniques like multispectral satellite imaging. They identify potential mineral deposits more precisely. The Kenna project is located near Nelson, British Columbia. It includes 3 adjoining properties. This is the part I really like. It includes Kenna, Daylight, and Athabasca, which have an estimated resource of over 3 million ounces of gold. 3 million. Both indicated and inferred. 3 million. You add this all up, and West Mine Corp owns premium assets that should appreciate as gold rises. Do your own due diligence and check out West Mining Corp. Their ticker's on your screen. Again, it's CSEWEST and OTCWESMF. Check them out. I'm really excited about them. And I will see you guys on the next one.